Nancy Pelosi, one of the most powerful and influential figures in U.S. politics, has made her mark not only through her leadership, but also through her savvy investment strategies. Over the years, Pelosi's portfolio has been a blend of diversification, informed decision-making, and a long-term strategy designed to weather the ups and downs of the market. Her approach to investing is often rooted in sectors that benefit from government policies and regulatory changes, making her a shrewd investor who capitalizes on trends driven by political and economic shifts. But the good news is, you don't need to be a political insider to apply some of the same principles Pelosi uses to grow her wealth. By diversifying your portfolio, investing in what you understand, and staying informed about market and political trends, you too can begin to build long-term wealth. Let's break down Pelosi's investment strategies and how you can apply these techniques to your own portfolio. One of the key principles of Pelosi's investment strategy is to invest in what you know. This means focusing on industries and companies that are well-positioned to benefit from government policies, economic shifts, and other market trends. Pelosi has a keen understanding of how government decisions, regulatory changes, and political shifts impact various sectors of the economy. This allows her to make informed investment choices based on what's likely to succeed in the future. While Pelosi's portfolio is subject to public scrutiny due to her position, her investment success largely comes from her ability to stay informed about sectors that benefit from political and policy decisions. Even for individual investors, this principle can work wonders. When you invest in industries you understand, whether it's technology, healthcare, real estate, or other sectors, you're more likely to make informed choices that align with your risk tolerance and financial goals. One of the most crucial elements of Pelosi's investment portfolio is diversification. Pelosi has investments spread across a variety of sectors, including technology, healthcare, financial services, and energy. By diversifying her investments, she reduces the risk that any one downturn in a particular sector will dramatically impact her overall portfolio. For example, if one sector, like technology, faces a market correction, other sectors like healthcare or financials may continue to perform well. This diversification helps smooth out volatility in your portfolio over time. To apply this strategy, you should look at investing in a broad range of asset classes such as stocks, bonds, and real estate. Some easy ways to diversify include ETFs, exchange-traded funds, and mutual funds that focus on specific sectors or global markets. Investing in growth sectors like technology for capital appreciation, adding more stable sectors like healthcare or consumer staples for consistent performance and income. With the right mix of sector-specific investments, you reduce the likelihood of significant losses during economic downturns and increase the chances of gaining long-term, stable returns. Real estate is another cornerstone of Pelosi's strategy. It's a tangible asset that provides stability and long-term growth potential. For Pelosi, real estate investments have offered protection against market volatility while providing income from rents or dividends. Real estate investments can take various forms, such as rental properties, which offer steady income streams through rent payments and can appreciate in value over time. REITs, real estate investment trusts, which allow you to invest in a diversified portfolio of real estate assets without having to directly own property. Property development funds, which provide access to development projects that can lead to significant returns. Investing in real estate allows you to diversify outside of the stock market and provide stability for your portfolio. Real estate investments tend to be less volatile than stocks, and the potential for income generation, whether through rent or dividends, adds an element of cash flow that can support long-term growth. For the average investor, real estate can be an excellent way to balance out the risks in a more volatile portfolio, offering both short-term cash flow and long-term appreciation. While Pelosi holds many stable, conservative investments, her portfolio also includes high-risk, high-reward assets. These investments are often in emerging industries, such as clean energy, electric vehicles, EVs, and artificial intelligence, AI. These sectors have the potential for explosive growth, but can also be highly volatile. For instance, clean energy is a sector that benefits from global shifts towards sustainability and reducing reliance on fossil fuels. Electric vehicles are gaining traction as advancements in battery technology make EVs more affordable and practical. AI is revolutionizing various industries, from healthcare to finance to entertainment. By allocating a portion of her portfolio to these emerging sectors, Pelosi is able to tap into the growth potential of new technologies. Of course, investing in high-growth sectors carries inherent risks, so it's essential to balance these with more stable investments. For individual investors, allocating a small portion of your portfolio to high-growth industries can help you capture major gains while still maintaining the safety of more traditional investments like bonds, real estate, and blue-chip stocks. Pelosi has been known to use options as part of her investment strategy. Options provide an opportunity to either hedge against risk or amplify returns. Options trading can be a powerful tool, but it's complex and risky, so it's not for every investor. It involves buying the right to buy or sell an underlying asset at a specific price within a certain time frame. For those who are interested in options trading, it's important to fully understand how options work before diving in. While options can increase the potential for high returns, they also expose investors to higher risks. As such, options should only be used as part of a broader investment strategy, and they should be approached with caution. Before using options, make sure you understand the different types of options, calls, puts, covered calls, etc. Recognize the risks involved, especially the potential for losses beyond your initial investment. Use options sparingly and as part of a well-diversified portfolio. If you're new to options, it's better to focus on building a strong foundation in traditional investments like stocks, ETFs, and real estate before venturing into more complex strategies like options. One of the most important aspects of Pelosi's investment strategy is her long-term mindset. Pelosi tends to hold her investments for extended periods, allowing her portfolio to grow and compound over time. The power of compound interest is often underestimated, but it's a key factor in building wealth. When you invest for the long term, you're less likely to make emotional decisions based on short-term market fluctuations. This approach allows you to ride out periods of volatility and benefit from the steady growth of well-chosen assets. Whether it's real estate, stocks, or mutual funds, a long-term investment mindset enables you to maximize the potential of your portfolio over time. For individual investors, focusing on the long term is crucial. Avoid the temptation to react to every market dip or rally. Stick to your strategy and focus on consistent growth rather than short-term gains. The longer you stay invested, the more likely you are to see meaningful returns. Pelosi's success in investing is also due to her ability to stay informed about market trends and political developments. She leverages her understanding of regulatory changes and government policies to make savvy investment decisions. Whether it's new technologies emerging or changes in healthcare regulations, Pelosi keeps her finger on the pulse of the market, allowing her to pivot when necessary. As an individual investor, staying informed is essential. You don't need to be a politician to understand how government decisions affect markets. Regularly read news, follow market trends, and stay updated on global economic shifts. This will enable you to adjust your investment strategy and capitalize on new opportunities as they arise. You can monitor key sectors like technology, healthcare, clean energy, and financial services. Stay updated on changes in tax policy, interest rates, and government spending that could impact the market. Use resources like financial news outlets, government reports, and investment analysis tools to stay ahead of trends. By staying informed, you can anticipate changes in the market and make timely, informed decisions to keep your portfolio on track. Diversification tips to implement now. If you want to diversify your portfolio like Pelosi, here are some actionable steps to get started today. Build a diversified portfolio by investing in a mix of stocks, bonds, and real estate. A balanced portfolio spreads risk and enhances long-term returns. Consider investing in ETFs or index funds that provide exposure to different sectors with low fees. Look into international investments to expand your diversification and hedge against domestic market risks. Explore emerging sectors like renewable energy, technology, and healthcare to capitalize on high-growth opportunities. Stay focused on the long term, ignore emotional reactions to short-term market fluctuations, and stay disciplined in your investment approach. Nancy Pelosi's investment strategy combines diversification, informed decision-making, and a long-term mindset to achieve consistent wealth growth. By investing in a range of sectors, including technology, healthcare, and real estate, Pelosi minimizes risk while capturing high-growth opportunities. Her ability to stay informed about political trends and market shifts has allowed her to stay ahead of the curve and make profitable investments. As an individual investor, you can apply these same principles to your own portfolio. By diversifying your investments, focusing on long-term growth, and staying informed about market trends, you can increase your chances of building wealth over time. Whether you're just getting started or you've been investing for years, these strategies can help you grow your wealth more effectively and efficiently.